Hey trader, Shane from GMT Futures and FX. I'm going to take you through our volatility filter or volatility indicator here. And the VM indicator is basically, it's Clyde's VM indicator, and it's an indicator we're using to measure volatility in the market. So I'm just going to take you through how to load that onto the chart, also basically how the system or how the indicator works and how we can use it in our strategy. So we're basically going to look at, if we go into Insert Analysis Technique, it is an indicator, so you'll find it under the indicator suite, and you'll see it here under VM. So if we scroll down, obviously alphabetically, VM indicator, there it is there. So we select OK, and that will load the indicator onto our chart. Now, the indicator is made up of a couple of inputs, so if we go into the actual indicator here, and we'll just open that up. There it is there. Now the default settings for this indicator, the length is 200, that's the default. The VM PPI, which is the pips per interval, is 17, and the cutoff is what you select yourself personally. So the idea with this indicator is that it's measuring volatility in the market, so basically based around price movement. Now if there's not a lot of price movement, then our VM number will be low. If there's good volatility and good price movement, then our VM indicator will climb, and you'll see that when we have a look at the indicator itself. So we're going to leave that as the default. We're going to leave the default as it's set there. We'll leave the cutoff at 0.1. Now, if you put a cutoff value in there, that's really not going to do anything unless you've got it in a strategy. So all it is a visual cue of whether the price action is basically below that VM cutoff or above it. So the VM cutoff is you working out, and you'll do this in your strategy, what the optimal volatility is for the market you're trading. So we're looking at the 233 tick bar here on crude oil. So we're going to have a look at how this all kind of applies to a moment in time on this chart. So let's go out of here, we'll go OK. Now we've got it set up, the data's on, so that's okay, we'll close that. Now I said 200 bars, so that's our default. So let's assume that we're trading from the 23rd of January, and we want to get a snapshot of what's happening in this 200 with these 200 bars here. So the first thing we're going to do is we're going to make sure that we have 200 bars loaded up on the chart. We do, but let's have a look at how that is reflected. Now if we go into our, and I'll format this trend line, if I go into trend line, and if I go into my labels area, I can select the show bar count. It will show me exactly how many bars I've got loaded up in this area here, and it says I've got 177, so I'll just move that forward a little bit because I want 200 because that's the default. So let's move it forward until we get 200 bars. Moving, okay, there's our 200 bars. So from the start of trading through till about 1:30, almost 2 o'clock, so about 1:30, 31, where we have 200 bars of price action on this 233 tick. So that's great. So now the way the indicator works is that it's taking the high, which is there at 47.93 approximately, and it's taking the low of that 200 bar. So the low is down here at 46.90. So it's going to take 47.93 away from 46.90, and that's going to give us a value in which we're going to start to calculate our VM number. Okay traders, so let's go through our formula. We had our high, so it's our high minus our low for the last 200 bars. That's our default, and that equals R. Now R is then divided by 17, and that equals our pip number or our VM number. So that's the VM number, and that's the value that we're going to use to determine our volatility. So for crude oil, we had a 233 tick chart. We had it from the 23rd of the 1st, 2015. That's when we started looking at this 200 bars back, and we actually went forward to 130. So basically our high at that time was 47.93, our low was 46.90. That gave us an R value of 1.03. So 47.93 take away 46.90. Then what we did was we basically, so that's our R value, and we take our R value and we divide that by 17, and that equals our VM number. So our VM number there is 0.060. So a good comment here, which Clyde has made as part of this indicator suite, is that obviously the faster we make this look back period, so if it's 100 bars back, the more dynamic the system's going to be. So you can speed this number up, or the rate at which this changes, by having a shorter or a faster look back period or a shorter look back period. So let's move that over and let's just check if our numbers match up. So there's our high, there's our low, and here's our number down here. So you can see it's plotting 0.060, so that's exactly what we had. So that is absolutely spot on as far as our number. Now you can see that as price moves, this volatility is increasing or decreasing. So if your range increases and the volatility increases, that's going to dramatically impact on obviously the indicator. So that's where the value comes in. And in the next video, I'm going to talk about how we use this indicator as a stop, a target, and a filter for taking trades. So we're going to get right into how we actually use the indicator to take our trade setups. So thanks for your time, and look forward to catching you on the next video update. Cheers.